Audit procedures. Audit procedures is process or methods that an auditors perform to obtain audit evidence which enables them to make conclusion on audit objectives and express opinion. Term used in audit procedures. First, analytical review. Analytical review did not used to obtain audit evidence, but procedure used to assess unusual transactions as principle to perform other procedures. Second, inquiry. The auditor will inquire management about business process and how financial transaction are recording as well as measure control on business transaction. Third, observation. An observation is used to obtain understanding and gather audit evidence mainly to the real process or ways how client have done specific business process. Then, inspection. Inspection also known as verification of the document. For example, the auditor inspect the sales invoice of the client that recorded in financial statements. And the last but not least is recalculation. Recalculation is done by reperforming the works performed by the client in the purpose of assessing if there are any difference between audit's work and client works. Term of control. An audit procedures is to test the effectiveness of control used by client entity to prevent or detect material misstatement. If the test reveals that control are weak, auditor will enhance their use of substantive testing which will increase cost of audit. Classification of test of control. First, reperformance. Auditor may initiate new transaction to see which controls are used by the client and the effectiveness of those control. Second, observation. Auditors may observe a business process in action and in particular the control elements of the process. Lastly, inspection. Auditors may examine business documents for approval signatures, stamps, which indicates that controls have been performed.